Dalal Street gains for the second straight week to post its biggest weekly gain in 3 months. All frontline indices gain close to about 2%, with IT stocks leading the up move. In this week's edition of Editors Roundtable, we'll decode the week on Dalal Street. We'll tell you what to expect from the earnings season in Q2. We'll put the spotlight on the pharmaceutical stocks. I am Reema. With me are Nimesh, Prashant and Ekta joining in. And also joining us today, not in the studio, but we've got Sandeep Tandon, founder and CIO at Quant Mutual Fund. Hi guys, how do you feel?
Well, I think the big news of the week came in the last hour of trading on Friday. Guess what?
Nobel Prize.
Nobel Prize?
Not to Donald Trump.
And it's not gone to Donald Trump.
So I think, I maybe say at the outset, I think today evening will be interesting and the weekend will be interesting.
Yeah.
Watch for the tweets.
We all hope for peace.
A lot of truths, being revealed in that sense. But markets were, I think,
I would say pink of health.
Absolutely, right? I mean,
IPOs,
this
pink
is the
of
color.
health, the color as well. So. In a way, it's a good market, right? I mean, this week we saw a bit of momentum in the broader markets. Nifty is also up, a bit of short covering as well. The FI selling has reduced to a larger extent. DIs have been buying the market. So it's a feel-good market, so to speak. And now there's an anticipation that maybe you're going to see that finally deal with the US as well. If that has to happen, if that has to happen, then there is still a room for an aggressive short covering rally because on the Nifty, the FIs are still stored more than 90%. So, aggressive FI positioning on the short side, things changing at the margin, earnings so far, it's not been a disaster to start with. So, let's see how it goes. But
have there been some nifty Diwali targets which have already come in?
I don't think people have started talking about Diwali targets and Diwali picks and all. I mean, last 3-4 years, every week or maybe every month was a Diwali, right? I mean, so much of momentum, so much of rally. So I think people have forgot that.
So if I have to list the positives this week, one, the Nifty and the mid-caps up, 1.5%, 2%. IPOs, LG Electronics saw 4 lakh crore, and despite that, you're seeing FIs also buying in the Indian markets, 3 continuous days of FIs buying in the cash market. So that's a positive. The phone call between Trump and, President Donald Trump.
About that, right?
Gold and silver, continuing with their
But
frenzied
that point
run.
that you made, LG, 4.5 lakh crores out of the market. Typically, what did we say? We said IPOs are sucking out liquidity.
Yeah.
But with 4 lakh crore out, blocked, not in the market.
And we still did well, and the FIs are also buying.
And this money will come back next week.
It's going to come back.
So imagine.
But let me just quickly, wrap up things in terms of what the week looked like. So Nifty 1.6% higher, Bank Nifty 1.8, mid cap 2%, small cap 1.5%. Sectorally, the IT index was up 5%. Healthcare was up 3%. Hospitals, by the way, right? Max, Fortis, etc. Real estate was up 2.3% as well. Large cap IT stocks, Infosys, TCS, Tech Mahindra, 4 to 5% gains here. Eternal was 6% higher this week. In the broader market, I look at the NSE 500 universe, Tata Com was up 16%, although 10% of that 16% came on Friday. PG Electroplus 14%. BSE was up 14%. So that's, of course, we've been reporting on over the last couple of days, a little bit of change in stance at the regulator in terms of what they're thinking perhaps is on derivatives. The consultation paper itself on weekly options and longer tenure derivatives, perhaps a little delayed now. Nykaa was up 10.5%, Divi's was up 10%, and a bunch of these smaller, not so small also, but Yes Bank was up 10%, Karur Vysya was up 8.5%, Federal Bank was up 8%. I mentioned, hospitals, Fortis 8, Max Health 8. Some cuts, but these are largely, a bit of small reversals, right? Tata Investment went up like a rocket, down 7. NetWeb has been a rocket for all this year, was down about 6.5% or so. So that is basically where we stand. Sandeep Tandon is with us. Maybe we can go across to him for a quick, just a broad view before. Okay, can we go across to Sandeep? Sandeep, hi. Can you hear me?
Yeah, I can hear you.
Hi. What's the view, Sandeep? We were talking about some factors this week and perhaps what's important next week. How are you feeling, and do you think there's more risk on here?
Hey, Prashant, frankly speaking, is definitely a risk on. The biggest important thing which for me is the inflection point. We believe that USD INR pair was on the verge of peaking out. Okay. And that's a very important statement which I'm making based on our analytics. We have talked about USD and right from 2012. In a 2019 book, we talked about heading towards 90. We are approaching there. We are in the fag end of that. And the way we have seen selling exhaustion on the FI side, and the last 3-4 days, we are seeing that has tapered down. Gold and silver also in a verge of peaking out from a medium term perspective. I think background is more constructive for India equities. We have been underperforming both emerging market as well as developed markets. Sentiments has been extremely bearish. People have virtually given up. And most important thing, some visibility is coming on the trade related challenges which we have seen. And plus the government initiative on the GST side, plus income tax and the interest rate also. So I think the background is more constructive for second half than what we have seen now. And hence we are 98% invested in the equities.
Hi, Sandeep. In fact, I remember last time when we spoke, you're among the very few who were expecting the pullback, and it's actually playing out, right? And as you rightly said, now there is a visibility of some sort of a deal with the US as well. Given that, how would you position the market for the second half? IT has not done well in the first half, pharma has not done well, and all these export-oriented auto stocks as well. Is that a place now to look at, given that there could be some deal with the US around the corner?
I think the way I look at, yes, IT obviously it is now trading in the neglected zone. The only challenge is that still the triggers are missing. So it should not be high conviction trades. We can say we can go all out and build exposure. I think it'll be too premature, but from a bottom fishing perspective, answer is yes. Auto obviously it has done well, and I think it has potential to do further well. But key question comes whether everything is priced in for the just GST thing or not. So I'll be slightly skeptical in the auto also building at the current levels. Rather, I will say that background is getting more constructive for the PSUs. Okay, PSU banks in particular, in general PSU. That's a theme which we think we are liking it for last few weeks. That's a thesis which has potential to move up. Then we're talking about large infra space. Consumption is also pretty mixed. It's very difficult to pinpoint one particular sector or talk about it. But I think these are the larger theses. Hotel and hospitality has done extremely well. I think we as a house remain constructive on this space also. I think few things are very clearly visible. And I'm saying forget other thing. Broadly, it is constructive. And you look at the depth of the market also, I expect it to improve further from the current levels.
Sandeep, I know I just heard you talk about technology, that it's in the neglected zone. That's great for value buying, but it still lacks positive triggers. But wanted to get your thoughts in what TCS is now talking about. Now they've articulated their vision. They want to be the world's largest AI, a tech services play. And this was a company which was very conservative, very cautious. They never made any acquisitions. They deployed all their capital either in buybacks or skilling existing talent. And now they're looking to build out a 1 gigawatt data center capacity, AI data center capacity. They're going to be very aggressive on the acquisition front. The word was very aggressive on the acquisition front. So do you think the company's positioning, the body language from what they had to say has changed to some extent? And would you read that positively? Because, till a month back, we were complaining that these IT companies are so cash rich and all they're doing with the capital is deploying it in buybacks. And that's an unproductive use of capital. Now they're making some bets, in the AI ecosystem. We'll have to see how it plays out. They execute on that, what the competitive landscape looks like. But at least it's a start. Would you read are we reading too much into what TCS has announced?
Generally, we don't give comments on individual company, but in general, I think we are too late for that. Today, we all remember Vishal Sikka, okay? What step he was taking at that point of time, and he was criticized, and unfortunately, he has to leave. So if you really ask me, we as an Indian IT company has already lost that opportunity. So which was there. So I think it will take some time now. Personal view is that if TCS or Infosys and of the companies for last few months are talking aggressively on those lines, when whole world has moved to the next level. So, and even including China, there is no comparison between us and China now. They're way ahead. Okay. At some time, and maybe a few years back, India was way ahead in this space. I think we have lost that opportunity. My personal view is that it will take 4 to 6 years more to rebuild and then say that we are also exist in this space. So I think it will be too premature to get too excited to see these statements. Companies, some of these large companies are reacting very late on this particular front.
Rima, I just want to say one thing on that data center, which is the question, right? What TCS is doing is they're not saying that we're building a large language model or something.
No.
They're just doing a data center.
Yeah, the infrastructure.
Data center as a business, it's an AI data center, but the AI part is
very small.
It's going to be, the data center is essentially going to be offered to, as we discussed, to hyperscalers. So it's like any other data center, which is not...
the only benefit is that they have the...
Innovation.
Yeah,
but the benefit is that it's in the Tata ecosystem, right? Like Tatas have the land bank, they have energy solutions, cooling solutions which they can leverage, like Tata Communication.
No, my only point was
that's the benefit TCS enjoys.
For them,
right?
it may be there's a lot of benefit synergies, etc. My only thing is, does it leapfrog them into this AI race suddenly? No, because it is a data center. I mean, at the end of the day, and so
and
that's the point.
It's a passive infrastructure. Yeah. The question is that does it eventually open up, for the company to get into active infrastructure?
No, to me,
but it depends.
The welcome thing is at least they're thinking in slightly different directions. Right. And I thought personally, that statement which they made, right? I think this is for the first time they
articulated
that
vision.
Ambition was very clear that we want to be the world's #1 leading IT services, AI IT services technology company. So. The fact that they want to stay a services company, which I think they are, but also but they want to be ahead and sort of a leader in that space.
And even the hard decision to let go of people. Yeah. It's hard for a company like TCS or any Tata Group company to let go of 12,000 people, but they took that, and we asked Kriti, and he said, it's the right thing to do. It was the right thing to do. So if you take that also as a signaling mechanism.
Absolutely.
But Street was not very excited. Stock was down.
You're getting prepared for the Q2 numbers.
So it's going to be a soft quarter. At the margin, it's going to be weak. But in that sense, it will be a bottom quarter because for the last 5 quarters, we've been reporting weak numbers. So there is a lot of hope that maybe this is the bottom quarter, and from here on, one should look upwards. In terms of numbers, for Nifty earnings, it's going to be around 6% for Q2 versus 11% in Q1. So clearly at the margin, it will look weak. Even in terms of margin, you'll probably see a 40 basis point improvement in the margins for the Nifty 50 companies. So that's kind of a number. Apart from numbers, for a lot of sectors like autos, discretionary, retail and everybody, it will be more of the commentary than the actual numbers for Q2 because Q2 was impacted because of GST, because of monsoons and everything. So the commentary would be more important rather than the actual numbers per se. In terms of the overall for Nifty EPS, Kotak is expecting a FY26 number of 1,086 and for FY27 a Nifty EPS of around 1,284. So that's on the margin on what kind of EPS to expect for 25 and 26. Now coming to individual sectors, banking is a big sector for us, big weight as well. It's going to be a weak quarter, and on this weak quarter, there could be further EPS cuts as well for the banking sector overall. So that's something on the banking side. I spoke about staples and discretionary. Apart from earnings, it's more about the commentary that's going to be quite important for that particular sector. So for that matter, for autos as well, it's going to be mixed, but the commentary is going to be quite important with the GST rate cut and everything. Telecom is going to be a mixed quarter again, with the ARPU seeing a bit of improvement, but no fireworks there. Even in metals, it's going to be a weak quarter, so to speak, and especially for a stock like GSPL, it's going to report a weak quarter, so some individual impact will come. Even for cement, it's going to be mixed with a slightly negative bias. So, as I said, at the margin itself, it's showing that just a 6% growth would mean that there is no big fireworks as far as earnings are concerned. Citi also puts out a note, and they explicitly mention about few positive and negative surprises. So in terms of positive surprises, according to the Citi note, they're expecting a positive surprise from Britannia. They can report a revenue growth as well as improvement in the margins as well. So that could be a big surprise. Within the banks, Bob is something that they're expecting good asset quality, good names and credit cost control as well. So Bob could be a positive surprise. And so is delivery, which can surprise positively in terms of earnings. In terms of negative surprises in this quarter, M&M is likely to, according to Citi note, because of the weak mix, you might some miss on the numbers for M&M. Even PI Industries is expected to report a weak number according to the Citi note, and UBI United Breweries also stands out in terms of expecting a weak quarter because of disruption, because of monsoon. So that's the overall number. Net, a weak quarter, but could be a bottom quarter for in Q2, and which can probably see a bit of a heads up as to what to expect in Q3 and Q4 on the back of the commentary. So that's the net overall summary of Q2, what to expect in this quarter.
If the expected surprises pan out, will Citi be surprised? Anyway, I'm just on a lighter note. But that's useful, Nimesh. Sandeep, you look at so much, so many, I know, hundreds of indicators, right? I mean, sentiment, price, etc. is only part of it. I want to just jump to the other big talking point, which is gold and silver. And what is your analysis telling you about those two from here?
Prashant, we have been constructive for a while, but the way we are seeing the noise level, the urgency to buy, everybody is talking about. So typically, it happened closer to the peak, not to the long-term cycle, but from a medium-term perspective, we expect that gold is on the verge of peaking out, and so is the case with silver to follow. So if you ask me if you have a core holding from longer term perspective, you want to hold your trade, answer is yes, one should remain invested if you are a long term. But if you are keen to build your exposure from the current level, then I think it's not advisable. One should wait from both perspective. A, from a USD INR pair which is peaking out, and if that start correcting from the current level, start appreciating, and so if the case gold correct, then the impact in rupee terms, gold and silver will be more meaningful. And hence, I will, as a investor, I will hold my position. But if I am a trader, I will book my profit maybe on immediate basis. When I say immediate basis, this month itself, I like to cut down my exposure. Nobody can time it so perfectly virtually at the top, but we are getting those indication that the time has come to cut down your leverage exposure if you have any.
Okay. All right. Okay, all right. Well, on that note, we'll take a break. But up next, we'll decode some more of the market action. And we'll get you why the pharma index, in fact, outperformed the Nifty on the other side. Stay tuned.